Hey everyone, and welcome to the PivotBoss Closing Report. I am Frank Ochoa, aka PivotBoss, with your analysis for the upcoming trading session, January 6th, 2016. Here's a look at the daily time frame of the ES. We talked about the previous afternoon that 1991 was going to be a zone to identify as a retest buy opportunity for those responsive bulls that are looking to defend the bottom of the key range. That indeed turned out to be a solid area of support, although price got to about a low of 1992s. So this was a very clean area here to identify for a potential bounce. You can see that price basically did just that as it traded back and forth throughout most of the session, trading an inside day after the previous session's wide-ranging day. Now it's important to note here that we still have our key range fully intact, 1991 up to 2102s. And the idea here is that responsive buying participants are looking to defend the bottom of the range for a shot at returning price back toward the MCVPOC, the HVN here at 2071s. So that's the current course of action at the moment. Any failure to hold above 1991s would put some strain on these 1981s and perhaps lead to a downside break. I mentioned before that eventually we're going to see expansion from this large trading range here, and when we do, it's going to lead a solid move in the direction of the break. But as of right now, it appears that bulls are defending the lower end of the range for a shot at returning prices back toward 2071s. Now, if we take a look at crude oil in a daily time frame here, you can see crude oil was rejected above the previous week's high price, 38.09. That occurred right here. This was the rejection right there of prices above that level. Also right at the volume shelf here. So you can see how there's a nice bell curve here, and then basically prices, the volume there goes flat. So this volume shelf served as clean resistance. The rejection above the previous week's high implies a return to the previous week's low, and that's exactly what happened on this session. And then price closed below those 36.23s or 36.33s. So that's important to note there. Especially any pullback into that area likely offers an opportunity to defend. So that's 36.23. Any pullback into that zone could offer an opportunity for bears to defend in the upcoming session. So you look for a push back toward the previous week's low or thereabouts. That could offer an opportunity for bears to defend and seek expansion through the bottom of the range. I mentioned before that there's no real edge trading around composite VPOC here of 36.88. It's just a lot of chop back and forth as the market is seeing two-sided trade. The edge is at the extremes of the range. That's why I mentioned you want to see fades at the opposite ends of the range. And right now, there could be an opportunity for bulls to fade the edge off of the previous month's low at 35.35 for a shot at returning prices back up. Now, one thing to keep in mind, value when offered here. So the previous week's high when offered and price dropped down, closing below the previous month's close. And then price pulled back to the previous month's close of 37.04s and also tested that 36.88. Both of those when offered and price closed much lower. So that is an indication that if value is going offered here, we could be approaching a potential price discovery phase. But again, we have to see clean expansion from this range. If prices fail to hold above 34.80, we could be looking at a continuation into 33.31 and 31.28 in the week ahead. All right, let's take a look now at gold futures. Gold futures here continues to trade within a very narrow trading range. This range here spans from 1045s to 1088s. Basically, you have a very sharp HVN here. This composite VPOC comes in at 1070 to 10. And I mentioned before, again, very similar to crude oil, there's no real edge in trading around this zone. This is two-sided trade. The edge is fading the extremes of the range. So right now, any push into 1085 to 1088 offers an opportunity to fade this thing back toward the bottom of the range at 1045. Likewise, any push into 1045 offers a short-term opportunity to redirect price back toward the top of the range. Eventually, we're going to see some significant expansion out of this range, and that's going to spark the next major move, which could be something to the effect of what we saw before. All right, taking a look here at the last futures contract. This is the NQ. The NQ I mentioned before here, the LVN near 44.49 was the LVN to defend for responsive bulls. That was the case in the previous session. Since then, I mentioned that a retest of the previous month's low at 44.71 offers a short-term buying opportunity as a retest for a shot at seeing a further continuation back toward highs at 4,700. Now, we do have an inside day very similar to the ES here. A breakout from inside days usually lead to multi-day expansion, so that's something to watch out for. The last time we saw an inside day was just earlier last week, where we saw an inside day here, and the breakout has led to a significant 2-day move. Now, given the fact that prices have traded within this trading range very nicely here over the last few months, implies that we will likely see the same back toward 4,700. But any failure to hold above this LVN at 44.49 and any close below it would suggest expansion out of that range. And there's key targets here at 43.92 and 43.11 would be the first major targets to play to should that breakout occur. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.